Now to the commodities trade, which has definitely seen some inflows in recent weeks. Oil prices, chief among them, though they've seen a pullback of late, now sitting around $80 a barrel after a 7-week rally. The pressure comes amid that string of disappointing growth data in China. Katy Kaminski is still with us to do a deep dive on oil. You did mention a little bit about oil prices, and we saw what had happened as a result. We saw this risk-off trade with the latest China data. Is there now a question of demand destruction in play because of this?
So I would say that if you look at OPEC and the suppliers of oil, they're really focusing on trying to limit supply and get oil prices up for business. On the other hand, in recent period, you saw a stronger dollar, which was a headwind against their goal. And then now you're seeing this data from China. And so if you looked at that graph of oil, what did you see? You saw a massive breakout. And then you saw it petering out a little bit. And so I think what we have to do is watch the consumer, watch the strength of the dollar, because that's going to really be a headwind if it continues to recover. And third, if the China story continues, it's demand destruction going against the goal for having higher oil prices from suppliers.
So is crude oil ripe for a breakout at this point?
We had been really watching a positive trend. There had been a very strong technical signal on the upside for oil. You'd seen a really massive recovery, and it looked like, and most people were talking about, okay, it's the next leg up since 2022. And I was interested in this because oil is the first thing to watch when you think about inflation, because it's usually those raw materials that start the wave. And then after that starts, it kind of trickles into the rest of the economy. So that was a very interesting move for me. But then there was these headwinds with the dollar and also just the China story that kind of murkied the waters of whether or not we're really going to see that uptick.
Do you have concern about the elasticity of the consumer when it comes to oil?
Well, certainly. I mean, think about oil as such an important commodity for the U.S. I mean, it's something that is an input to so many different processes. It's a bottom line item for a lot of commuters. So it is really something, if you're thinking about next wave of surprise and inflation, it's a good place to start looking.
And so additionally here, I mean, for the consumer that has looked across what they're paying for gas over the most recent years and known how much that's taken out of their pocket, it's been an additional kind of measure of the inflation that they feel and that pain at the pump, as the administration had put it many times over. All that considered, does the consumer feel any better now as a result of oil or gas prices being lower at this point?
I would say yes. I mean, anything that sort of alleviates some of the high costs that the consumer has taken on since last year, I think is a pro. That's why we were concerned about oil prices going up, because that could be sort of a catalyst into another wave. Because unfortunately, inflation doesn't just go away. It kind of goes in waves and it moves around. It's moving, and I was worried it was moving into oil.
Sure.
And speaking of catalysts, so one of the earlier predictions had been that demand from China would be a catalyst for crude. Is there still the potential for that demand to return or pick up from China?
Certainly, and I think if you look at oil prices earlier this year, they were pretty depressed and there was little movement. And I think a lot of that came from because you also had a weaker dollar, so you would have thought that would have helped, but came from that China demand just not realizing.
And then just additionally here, Mizuho had been one of the upgrades that came through this morning on Chevron here. As we think about some of the oil and gas players that have been beneficiaries, at least over the course of 2022, and now during 2023, still watching closely to see where there are additional inflows, even after the year that was. You still have some firms that are saying that there's a benefit, even though oil mix has trended below long-term 50%, as talked about on their earnings call. What are some of the catalysts that could still move the oil and gas companies higher at this point?
Well, I mean, I think demand is obviously the first one. So we get demand back, particularly in China. If we continue to have a weaker dollar that positions oil prices and our relative export prices competitively. So those are the first two things I would think about. And of course, how strong the consumer is in terms of general demand.
All right. Katy Kaminski, AlphaSimplex Chief Research Strategist and Portfolio Manager. Great to have you here with us in studio today.
Thanks.